You've seen the headlines, right? The market's crashing. No, wait, it's soaring to new highs. It feels like a constant battle between bulls and bears, a tug of war where most people get whiplashed. But what if I told you that for smart, long-term investors, this isn't a battle at all? It's a dance. Markets go up and markets go down, but truly wealthy investors have figured out how to win in both scenarios. They don't just survive the volatility, they thrive on it. Stick around, because today we're not just talking about stocks, we're decoding the mindset that separates the rich from everyone else. So, why do most people lose money in the market? It's a painful question, but the answer is surprisingly simple. They react. They see a scary headline on the news, a red arrow on their phone screen, and their gut screams, "Sell! Get out now!" Then, when the news is euphoric and everyone's talking about a new paradigm, that same gut feeling, now fueled by FOMO, screams, "Buy! Don't miss out!" This is emotional investing, driven by headlines and hype, not by strategy. It's the classic recipe for buying high and selling low, the exact opposite of what you want to do. The financial media is designed to grab your attention with fear and greed, but successful investors don't react to the noise, they respond to the underlying cycles. And here's the secret. Market cycles are predictable. Now, hold on. Before you call me crazy, I do not mean you can predict that the market will hit a specific number on a specific date. That's fortune telling, not investing. But the behavioral patterns within the market, those have repeated themselves for centuries. It all boils down to a 4-stage cycle. First, you have accumulation. This is the quiet phase after a crash when nobody wants to touch stocks. Smart money is quietly buying up assets on the cheap. Next comes the markup phase. The public starts to notice, optimism returns, and prices begin to rise steadily. It feels great. Then comes distribution. This is the peak, the party phase. Everyone's a genius, media headlines are screaming about new all-time highs. But behind the scenes, the smart money that bought during accumulation is now quietly selling to the euphoric crowd. And finally, you get the markdown. The party ends, panic sets in, and prices fall. The cycle completes, and accumulation begins again. Your job isn't to time the exact top or bottom, but to simply understand which phase of the cycle we're in. So how do you use this knowledge to build your playbook for the future, say for 2025 and beyond? It's not about making wild bets. It's about disciplined execution. First, build a core portfolio. This is your foundation, made up of high-quality diversified assets like broad market ETFs or index funds. Think of it as the sturdy trunk of your financial tree. This isn't the speculative stuff. It's your sleep well at night money. Second, embrace dollar-cost averaging. This means investing a fixed amount of money at regular intervals, regardless of what the market is doing. When prices are high, your fixed amount buys fewer shares. When prices are low, it buys more. This automatically forces you to buy low and removes emotion from the equation. Finally, focus on holding quality. Don't chase flashy, unproven stocks. Invest in companies with strong balance sheets, real profits, and a sustainable competitive advantage. Quality endures through all market cycles. This brings us to the ultimate showdown: emotions versus systems. Your emotions are your worst enemy as an investor. Fear makes you sell at the bottom, and greed makes you buy at the top. A system, on the other hand, is a set of predefined rules that you follow no matter what. Your system could be as simple as I will invest $500 into my index fund on the first of every month and rebalance my portfolio once a year. That's it. A system doesn't care about scary headlines. A system doesn't get FOMO. A system doesn't panic. Modern investing apps and robo-advisors make this incredibly easy. You can set up automatic transfers and investments, effectively putting your wealth building on autopilot. When you let a system do the driving, you take emotion out of the passenger seat, where it can't grab the steering wheel and drive you off a cliff. Systems win because they are consistent, and in investing, consistency is everything. Now, does this mean you should always be 100% invested in stocks no matter what? Absolutely not. Understanding the market cycle also means knowing when to play defense. As we move from the markup phase into the distribution phase, When euphoria is high and valuations are stretched, it's wise to start trimming some profits and increasing your defensive positions. What does that look like? First, cash is not trash. Holding a portion of your portfolio in cash gives you dry powder, the ability to buy great assets when they go on sale during the markdown phase. Second, consider bonds. While not as exciting as stocks, high-quality government or corporate bonds provide stability and income, acting as a shock absorber when stocks fall. And finally, look at low-volatility ETFs. These are funds specifically designed to hold stocks that are historically less volatile than the overall market, offering a smoother ride during turbulent times. A defensive portfolio isn't about timing the market, it's about managing risk and preparing for the inevitable downturn. So, let's bring it all together. The market isn't a random, chaotic casino. It's a game with rules, driven by human psychology and predictable cycles. By understanding the 4 phases, accumulation, markup, distribution, and markdown, you can stop reacting to the noise and start acting with intention. Build a disciplined system with a core portfolio, dollar cost averaging, and a focus on quality. And know when to shift towards defensive assets like cash and bonds to protect your capital and prepare for the next opportunity. This is how you stop being a pawn in the game and start controlling the board. This is how you master the cycle and master the game. Thank you so much for watching. If you got value from this breakdown, do me a huge favor and hit that like button and subscribe to Finance Decoded for more content that helps you build real, lasting wealth. Let me know in the comments which phase of the cycle you think we're in right now. I'll see you in the next video.